And over the past couple months, right, notably, we haven't made any new lows. So the last short I took on crypto was at 72K. And this was because Saylor was selling his Bitcoin. And this is a narrative that I also made a video about as well. And it describes why I was shorting particularly then, because Saylor is basically running the biggest Ponzi in history. And so because of all the mechanics happening with Stretch and all the dividends that he owed to everybody as well, this was basically a recipe for disaster because he would have to sell many more millions of dollars in Bitcoin. And so he did, right? Of course, Bitcoin went all the way down to 60K, but it actually held those lows. So even when he sold more Bitcoin somewhere around here, Bitcoin had the opportunity to fall, but it didn't. And so there are a lot of people probably getting very complacent in shorts, thinking that we might get another leg down. But for me, whenever I see, the exact opposite, where if there's a lot of bearish catalysts, but price is refusing to go lower, then I start to get, an upside bias. Similar to all the way back in crypto, when it was at the top right here in October, many new catalysts happening with the digital asset treasuries, everything like that. But of course, price could not push higher, and we also ran out of catalysts. And so, the opposite applies here where we ran out of negative catalysts, right? We had the Iran war, we had Saylor selling, we had a lot of overhang, all the quantum risk, multiple different confluences, all bearish, and yet we refused to make new lows below the 60K level. And so ever since the sweep of 58K, I was thinking that, at the very least, my bias is towards more chop.